Welcome back to Market on Close. I'm Caroline Woods. We have about 9 minutes left in the trading day. It's time for the big picture. Let's welcome in the team from Charles Schwab. Jeffrey Kleintop is Chief Global Investment Strategist at Charles Schwab, and Collin Martin is Director of Fixed Income Strategist at Schwab Center for Financial Research. Great to have you both here. Jeffrey, let's start with you and get your thoughts on the Fed rate decision. I was talking about a market turnaround that we were seeing, kind of blink and you miss it. The NASDAQ already back to the flat line, but overall, what's your takeaway?
Well, Collin can give you the details on what the Fed did and why they're doing it. I would just say the Fed clearly not in a hurry to cut rates here, but you know who is? The Bank of England. They're likely to cut on Thursday by 25 basis points. Probably some members may even call for a 50 basis point rate cut, and they're likely to follow that up with a back-to-back cut in June. The European Central Bank is also likely to cut rates by 25 basis points at their next meeting in June. Inflation is not expected to ramp higher in Europe, in the UK. A different perspective here on the outlook for inflation in the U.S., keeping the Fed's moves in check.
Yeah. All right. So, Collin, in terms of the Fed, very much kind of a wait and see, not nearly as eager here. Want to get your thoughts on their commentary, and also, do you get a sense that they're prioritizing one of the mandates over the other? Fed Chair Powell was asked that question, and he wouldn't give a clear answer there.
You know, right now I wouldn't say they're prioritizing either, although it could come to the point where they might need to do that, where the mandates are in conflict. But in terms of where they are right now and what we expect over the next few months, Jeff hit the nail on the head that something Powell has repeatedly said in previous speeches and meetings, and then he repeated it today, that the Fed really isn't in a hurry to cut rates. And that shouldn't be much of a surprise. In the statement itself, the Fed highlighted that despite kind of that effective net exports, the economy is still in a decent place right now. It's growing at a solid rate. It highlighted that the labor market is still solid. So even though there's concerns about a rise in unemployment down the road, right now we haven't seen that. Now, the statement also highlighted the idea that the risks of both higher unemployment and higher inflation have risen. So that goes to the idea of which they're going to focus on down the road. And I think Powell laid out how they're going to view that pretty clearly. They have a dual mandate, and they can point to which one is kind of getting further away from that mandate. So I think it depends on, if inflation begins to reaccelerate from here and then gets further away from its 2% goal, or if the labor market really starts to show more signs of cracking. Right now, though, these are just concerns, and we haven't really seen it just yet. So they're in wait-and-see mode right now. Markets have kind of pushed back expectations a little bit. Our view hasn't really changed. We still think the Fed will probably cut rates 2 times this year unless the labor market really weakens more than we're expecting. And the timing of that first rate cut has probably been pushed back as well. We were initially focusing more on July. That's still possible. But given the strength of the April jobs report and the patient approach that Powell stressed, September seems more likely now.
Okay. Collin, we've talked a lot about the stock market reaction to this news out of the Fed, or really kind of lack thereof in terms of news. Haven't talked much about the bond market, and there hasn't really been all that much action.
Yeah, that's right. I was a bit surprised because there wasn't much coming out of this meeting. When the statement came out, they announced no change, which was widely expected, and Powell didn't really give us much. He highlighted that they're probably going to stand pat for a little bit. Yet we saw yields decline a little bit, both on the short end and the long end. I think that might come just from the general uncertainty that we're seeing. And that was a key addition to the statement, that the risk to both of their mandates moving in the wrong direction have risen. So when you get in this environment where there is uncertainty, potential hit to growth, I think markets are focusing more on that, where if things kind of do take a turn for the worse, maybe down the road that will result in more Fed rate cuts, and then we've seen yields decline a little bit. But I'd say in what Powell said in the here and now, I was a little bit surprised by that drop in yield.
Okay. Jeffrey, Fed Chair Powell basically says they need to take a wait-and-see approach because we need to see how all of this tariff uncertainty kind of plays out. We know that the U.S. is meeting with China in Switzerland over the weekend. We know that trade between the two countries is essentially at a standstill, and China is feeling the pain based on the rate cut and some of the stimulus measures. What are your thoughts on progress that we could potentially see there?
Yeah, this is the critical issue, Caroline, as you know. To me, I think the market's expecting some sort of de-escalation could come out of these meetings, but to me, I think we're in like a 2018 scenario where the U.S. and China had a long series of meetings and negotiations during Trump's first term, with always some sort of deal seeming to be close, just like right on the cusp of happening, but it dragged on and on and on. It didn't end with a de-escalation or a comprehensive agreement. It ended with that phase one narrow trade deal that didn't unwind any of the tariffs. It actually locked in most of the existing tariffs at that point. It just ended further escalation. So to me, market optimism may wax and wane over the potential trade deals during the coming weeks, with the average trade deal historically taking 18 months to get signed for the U.S. So the market may have gotten its hopes up that a deal's coming soon. I'm less confident that that's going to be the case.
Okay. All right. We'll leave it there. Jeffrey Kleintop, Collin Martin, thank you both so much.